Good morning, everybody. It's 8:15 a.m. It is November 12th. Welcome to my channel. Now, yesterday was Veterans Day. Banks were closed. The bond market was closed. And it was a very interesting session. You could just tell by the way the market was moving that it didn't have banks. The volume was low. Even how we kind of hugged those lows yesterday. In a typical market, you would have went lower. You would have pushed a little lower. But then what happened yesterday was certain sectors really got love. That were the overall market breadth was weak, and it's improving now. And what's ironic yesterday was tech was weak yesterday, particular semiconductors. After that SoftBank news about selling all of its stake in Nvidia, a couple of Rigetti and CoreWeave earnings were not the best. Tech just was weak yesterday. But the overall market was decently strong. And that was enough to power the market, right? And we're still getting positive news about the government shutdown. And we're gapping up currently right now in both markets, in the NASDAQ and the ES. We're at a crucial area in the NASDAQ. NASDAQ's been relatively weaker. Okay. Today we have a lot of Fed speak. A lot of Fed speak today. Mortgage rates came out this morning. They're up again. That's just because the 10-year yield has been rising. Okay. And I keep talking about how tech was driving this market up. Right? It was a very narrow breath with the top stocks, Mag 7s, moving the markets, even when the breath was deteriorating. And we had a change of guard. Yesterday, tech was weak. Now, banks weren't involved yesterday, but tech was weaker, and the rest of the market was able to catch up. Now, we know this time of year, into the end of the year, is bullish. Generally, it's bullish. And now you have a little juice with government shutdown ending could help prop the markets. It doesn't really matter. But the markets gets that little sugar rush. Right? We didn't go down because of a government shutdown. That's not what we just recently went down. Okay, it was overvaluations. Had nothing to do with the government shutdown. Okay? That's what's going on. So, let's just get into it. All right? Welcome to my channel. My name is Steven Gonzalez. I use market and volume profile. Market profile and volume profile to find structure in the markets. Loan supply and demand, gamma expression levels, the most traded price of the year, the month, the week, and the previous day. That is how I look at the markets. That is my edge. Okay, that's how I construct game plans. Also use anchored VWAPs, market internals, and bookmap. And my weekly expected move indicator, which is very interesting. How we're not that far away from the weekly expected move to the upside in SPY. We made a huge move since Friday. So I have that in mind. All right, I have that in mind. Now, hopefully you join me every day. Give you the market story, the market news, technical analysis, and I give you the long and short trade scenarios at the end, towards the stream. Okay, so hopefully you join me every morning. Subscribe and set that alert. As always, if you want more in-depth coverage, you're going to join my Discord, Confluence Trading. Go to the YouTube homepage, click on the link, sign up, and what are you waiting for? Get that free indicator. I think it's awesome. Every week it just proves itself. All right, now the one strong one this morning is, not this morning, Eli Lilly is already broke its expected move to the upside, powering healthcare higher. Powering healthcare higher. Okay, now let's get right into it. let's go right to the futures watch list here. And what's moving markets? Well, interesting too. Bitcoin was down yesterday as well. Kind of tracks Nasdaq a lot of times. Ethereum up 3.39, Bitcoin's up 1.98, Silver's up 1.41, Nasdaq up 0.62, Gold up 0.37, ES up 0.36, Russell's up 0.35, the Dow's up 0.24, the dollar is up 0.18. 10-year yield is flat. 30-year bonds flat. VIX is down slightly, 0.75. Crude down 1.31%. Gold, energy just, crude just can't get out of its own way, right? But I know why, because we're in like a big balance area, and at the most traded price of the year, so in the last year. That's why crude is there, all right? It's not a surprise to me. All right, moving on to the Mag 7 Plus. AMD had its first analyst day in 3 years, I think, and they mentioned long-term growth, and that stock's up 6%. 6%. All right. Close at 237. They're at 252. So their CEO was speaking yesterday, and just everybody liked what they heard. Coinbase up 1.47 with Bitcoin. Nvidia's up 1.24. Broadcom up 0.90. So C semis are starting to get love this morning. Right. Moving on. There's no laggard. Berkshire Hathaway's flat, basically. All right, moving on to top sectors. GE Vernova, Qualcomm, Caterpillar, Oracle, all up the top here. Nothing going out of control. Down to the bottom, Visa, McDonald's, Home Depot. Nothing special there. I'm going to get rid of this. Something happened with that ticker. And I'm not sure if that's Skechers. I can't remember. But that obviously got bought out or something, because that's frozen. Okay. ON, I believe, reported earnings are up 8%. Viking Therapeutics up 3.69. Oak Club reported earnings too. They're up 3.12. CoreWeave up 2.84. Lyft up 2.2%. All right, let's look at laggards. Not really. Lucid, AstraZeneca. There's nothing really to speak of here. There's not much laggards. Okay. Let's go to sectors. No shocker here. Semis was the weakest yesterday. You can see they closed yesterday at 351. They're already up to 356. Okay. Technology's up 0.80. That's going to move our markets. That's why we're gapping up. Lagger is energy. Crude's down a little bit. Okay. They actually had a decent day yesterday as far as the sectors. We'll go over that in a second. All right, moving on to, we're going to the economic calendar, which lately hasn't been giving us a lot because of the government shutdown. All right, so today, 30-year mortgages, they went up. Okay, 0.03. Like I said, 10-year yield has been moved up, so that's going to affect mortgages. Now, we got Fed Williams, Fed Paulson, Fed Waller, Fed Bostic, Fed Mirren, all speaking during the market open, which is great. Lately, they haven't been moving the markets. Powell's not talking, so that's what's going on there. As far as, let's see here. You also have Besant speaking at 10:40. So there's a lot of speaking going on today. And then at 1, Levitt speaking. 4, there's a U.S. vote on stopgap. Tentative. That's at 4. Market's going to be closed. Okay? Market's going to be closed. There's really not anything here. Yeah. So the one thing I wanted to show you guys, talk about, is this. The S&P 500 recovered losses with approximately 345 shares gaining. I don't know what that means. I don't know if they mean 300 shares. I think they mean stocks. But the Dow Jones Industrial Average rose 1.2%. FedEx, a barometer of the economy, jumped more than 5% as it expects profits to increase this quarter compared to last year. Nvidia shares fell 3% after SoftBank sold its entire stake. But the thing about the Dow, didn't really talk about it. It pretty much made all-time highs yesterday. Okay, we're going to look at that in a second. So let's go to some stock news here. So that's the reason AMD stock rose 5.6. The chipmaker unveiled long-term growth targets at first financial analyst day in 3 years. Cisco rose 0.9 ahead of networking gear providers' results. Alphabet stock gained 0.6 after the tech giant said it will invest 5.5 billion euros in Germany. Nebius, that stock gained 0.9 after the AI cloud firm signed a deal worth 3 billion with Meta. All right, so that's some news there. Looks like GM wants parts makers to pull supply chains from China. IBM says Loon chip shows path to useful quantum computers by 2029. Microsoft expands Danish quantum facility with second lab. Let's see if there's any. Nope. Okay. Let's look at some earnings. Let's see if there's what's on the earnings tab. We had before the open today. No, I'm sorry. Yes, today. Circle reported. I don't see them leading, so they must have not did the best. ON reported. All right. Then after the close today, Cisco. That's really it. Tomorrow before the open, Disney, JD.com, Bilibili. That's really it. Okay, that's your earnings. And that's it there. We're going to move on. Let's look at some market internals. We'll give the recap there. Really simple. We'll always give that recap. That's how I always gauge what is going on under the hood of the markets. Now, yesterday, okay, I want to point something out. This price action was very weird. All right, it was very weird. I mean, you literally tested that bottom 1, 2, 3, 4, 5, 6, 7, 8 times. And the VPOC was down here. You could see we weren't super weak, right? But at the same time, I always want to point this out. This is always a tricky part, right? When the QQQ pulls back and hits that 20-day simple moving average, like usually some kind of algorithms come in and buy that. And you also pretty much hit the 9 EMA daily on the SPY when we were let down here. So I wanted to get long here. I think I tried one long and I got stopped. And then I was just like, okay. And then what was really the outlier yesterday with the internals was the equal weight. Look at that equal weight, how divergent it was. It's because technology was weak. You can see technology was the only sector that closed red off the open yesterday. But look at this. It just kept pushing and pushing and pushing, right? And then finally, it pulled the market cap weight around 1155 right here. And then it was just boom. And then we just consolidated, right? This 2-to-1 buying going into up stocks versus down stocks in the NYSE was the key. You can see the Nasdaq exchange was negative, right? Negative. So, that's the market internals. It just was never that weak. And I just showed you the daily charts. Very hard usually when you test those moving averages that you just start cracking lower. Okay. Now, let's go into some dailies and then we'll go into the sectors. Okay. All right, so you can see yesterday kind of held at 9 EMA daily. Right, so we're still in last week's range. We're still in last week's range. You can see we pretty much test the 20-day simple moving average, test the 9 EMA simple moving average, and look, they're starting to go up. Right? So you have this consolidation here, which is going to be last week's highs. Right? We're gapping up right now. 685. This level is 685.80 We are at 685.11 right now. So, do we just rip through this today? I don't know. But look at that expected move for the upside this week. It's right there at 688.37. 688.37. Do we get there? I don't know. Right? This little consolidation could slow down the market today because we're right here. This could be a profit taking moment. I don't know. Okay, let's look at futures. Remember, I was talking yesterday and I said, oh, this might look like a little head and shoulders. Inverse. Shoulder, shoulder. Head. Neckline. Right? And then we just basically broke up. Okay. So the futures, you can see the consolidation here. And this is where we are. This is last week's highs in futures. Okay. This is what we're doing. Look at that freaking hammer. And another day up, and another day up, and another day up. Right? So there is nothing to worry about right now in these markets. We're doing what we're supposed to be doing. There's the pullback. And now we're maybe going for all-time highs in Santa Claus rally unless something else comes up. Okay, let's look at the Qs. Qs are relatively weak yesterday. But the Qs aren't just comprised, obviously, of the technology sector. It's also communications to consumer discretionary. So those were all up. That's why the tech wasn't just falling out of bed. Now, consumer discretionary, communications, and tech were all red. I don't think we'd even be up yesterday in the overall markets as well. That's why we were able to still go up, because it was just tech. The rest of the market was green. Now, look how we closed yesterday. Again, inverse head and shoulders, right? Shoulder, shoulder, head. There's your neckline right here around 624. Well, we're over 624 right now, just a little bit. We're right here. Let's get into it here. 625. So look, we held the 20-day simple moving average. I spoke about this yesterday in my room. I was like, look at that support. Look at that support right here. Pretty much the previous day, didn't even touch it. Okay, where are we at now? 625.15. Right here. Right with these resistance right here. So right around the 626.61 resistance. Okay, we're right here right now. So key resistance levels. Support in this consolidation, resistance here, we're right there. Do we break out today? I don't know. Right? Nobody knows that. We've come a long way. We're just trucking along. Okay, let's look at futures. Look at that. Look at that resistance. Right around 25822s. Okay. This has room to rip up at least a year. I mean, that's a like I said, I'm not big patterns, but that is a big neckline here. Shoulder, shoulder, head. Boom. That is right in our faces. Okay? Right in our faces. Now, let's do a little sector run up here, and just to show you the overall market breadth and stuff like that. Okay? Let's check this out. I'm going to go to this one. Okay? Let's do just a little roundup of what has been going on with the sectors that were weak. Look at real estate. Look at the real estate from here. Boom. Okay, these were weak prior. Okay, let's look at energy. Look at that. Boom, boom, boom. the overall breadth has been improving. Communications, a little bit. Remember, Meta's been weak, but a little push up. Google's been strong. So is Netflix. Okay. Healthcare is the big boy. Look at that. Look at that. Boom, 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 boom. Eli Lilly. Look at that. That's your healthcare. Okay. Staples finally got love. Look, right from this bottom, I actually added to my portfolio XLP right in here. And I added another. So, and I have like a couple cover calls on it. I think I have it at 78. A couple cover calls. So even if my stock gets called away, I feel like it's going to come up here and do some pullback, and I probably just pocket the cover calls, but I don't care. I make profit no matter what. So that's XLP. Let's look at materials. Look at materials getting a bounce. Okay. These are the sectors that were not looking so hot when the tech was ripping up. Okay. Tech was ripping up. XLY is a mess. Discretionary, look at that. You're just consolidating. And so these are the messes. Industrials, look at that. Look at that. You're in the middle of crap. Financials made a little push, but still in the middle of crap. Okay? And your semis and in your technology, look at that. That was semis yesterday. Right? Here's technology. Right at the 20-day, right in this congestion. But this is, where is it now? 295. It's about up here right now. Okay? That's the sector look. All right? That's the sector look. Let's look at the RSP, which is equal weight. Oh, let me go back to that chart. Let me go back to that chart so I can. Let's go to the RSP. See RSP? Pushing up. Nice move. All right, and we'll just end it on the. Oh, I wanted to show you guys the Dow. Look at that Dow. Friggin' almost all-time highs. Look at that. Look at that move in the Dow. Now, Dow is a price-weighted index, so Goldman Sachs is the heaviest weight because it's the biggest share price. And Microsoft, those are the leaders. Microsoft, Goldman Sachs, Caterpillar. Just because they're the most expensive. That's how that works for the Dow. Look at the Dow. That was the Dow. Crazy. All right. Let's move on. Enough of that. If you guys want to come to know what markets are doing inside, why they're doing it, that's what I feel I provide. Okay. Hopefully that makes sense to everybody. Hopefully you understand why I show you those things. I always want to know why, what's going on. All right. Let's go to the hourly charts here. All right. So let's look at what we've been doing. Okay. And there's a couple notable things here. All right. I've been talking about this anchored VWAP from all-time highs over here, right? We battled it here. Won the battle. Came back, tested the week-to-date anchored VWAP here yesterday. Bounced up, consolidated, and we're moving up. Okay. Now, for this trend line, I'm not holding anything against it. It's the first really trend, and you can maybe say you broke it, but we need another test, like a swing here. So I would actually move this to here probably. Bottom line, you're making swing lows, right? Moved up, pull back, swing low, swing low. You can look at that as a swing low. Now, we're in a very interesting place now. Okay. And another note, this anchored VWAP from this move up has never even been tested yet. That's just the strength of this move. And if anybody doubts anchored VWAPs, anchored VWAPs, all right, I want to show you something. That's why I have them on my chart. And they just get there automatically. But I want to show you something here. If you doubt anchored VWAPs, right, that people or algorithms don't hit them, I want to show you something. Look at this pullback, not yesterday, the day before yesterday. Where did that go? Right to the month-to-date anchored VWAP. Where did the pullback go yesterday? Right to the week-to-date anchored VWAP. That's why I have them on my charts. Okay? It's crazy. And they just automatically get put. I don't have to draw them on. They just automatically every week get reset. I shared my Thinkorswim. I didn't share it yet, but no one said anything. So I have a workspace in Thinkorswim that I can share, but no one said, hey, like I'm interested or whatever. But that has anchor VWAPs for the week to date and month to date automatically, just like this. Okay, for futures. But I just want to show you that that's how that works. Okay. Now, what is key here? Okay. We know we're coming up to this consolidation here, right? That's a lot of trading volume. There's a lot of overhead supply. Okay. Now, the big level here, all right, we're pretty much coming up to ultimate balance. All right. Most traded price of the week's here. That's probably going to move. All right. But the most traded price of the month is at 6885, right? Now, that's no shocker. Look at all this trading in the last month. Okay, we're back here. We're back here. Generally, with all this overhead supply, you do not just cross this and just rip. Generally, you don't do that. Okay, I'm expecting some kind of play around this area, and then we figure out what to do. I would say the least point of resistance is to the upside. But it's not going to, I don't think it's going to be easy. Okay? I really don't. Now, this no bank move here, like I said, this generally would have usually broke the way that usually the market moves. Not saying all out sell off, right? That was just weird. You could just tell that banks were closed. It just, you could feel, you could just sense it with the price action. It wasn't really moving how it normally does. Okay? So this is the level to look at. You know, you dip below here. I'm not saying it's all bearish. I think we could basically test this 68.60 level, most traded price of the week. I think we definitely could give a shot here. And then I would say if we even test it here and we started to push back up, I probably will look for longs to then move up. Okay? Because I definitely think unless something happens, I don't know how you can't say now the bulls are back in control, right? We're over the month-to-date anchor view up, over the week-to-date anchor view up, over the all-time high anchor view up. It's all in this driver's seat for the bulls, okay? Which it usually always is, right? Shorts are always short-lived. It's very hard to short the markets. It's very hard. Now, moving on to the Qs. All right, couple barometers here. Fibonacci from the all-time highs down to this low that was made on Friday. Okay, we are now over the 50% retracement. We are now over the 61.8. See how we're right here? We're battling the 61.8. Okay, now if you draw a proper trend line from here and just connect the levels, this downtrend is still intact, and it's lining up right up here. Okay, and like I said, this trend line is subject to movement. Like I could probably do that. I'm not weighing anything on this trend line, this uptrend line. It needs to have more touches, to be honest with you. But this one, what do we do if we slam up into this? I don't know. But remember, you look to the left. That's why, you know, if you just do trend lines, they just seem to work, right? I don't have to do it all the time, but look, this consolidation here, and we're coming right up to that consolidation. And again, what are some markers? Right? Let's look at them. 61.8. That is your 25753s. Right? Uh, Now, didn't happen yesterday. Notice the alt anchored view up from all-time highs was right here, and then you flatlined, and then now we pushed up after hours. Right? You can see the Nasdaq actually broke week to day anchor view up and the month to day anchor view up yesterday. All right, has not touched the anchored view up from Friday's lows as well, but we're all above them now. Bulls are in control. Bulls are in control. All right, there's going to be a day, I believe. Now you did have a little selling, right, in the overnights yesterday. You got that pullback. Now we're up, right? Remember this, what I talked about, this inverse head and shoulders, and I believe it's a nice one in the Nasdaq as well, right? Make that like your neckline, right? There's your left shoulder, your right shoulder, your head. And if I'm saying right now, if you get a pull back here and we get a higher low, that's probably along to break into Santa Claus. Okay. Now, of course, we could do this, but this would really be nice. Okay. That's your hourly charts. All right, let's move on to market profile, volume profile. All right, let's look at the ES here. Okay. That volume profile on the right here is not a lot of, can't get too much from that. Okay. But big levels to talk about here. We're in supply right now. Okay. We're gapping up. Okay. So big level. I just talked about it earlier. The 6885s, it's your most traded price of the rolling month. That's a big level. When you have the most traded price of the rolling month, notice here that spike here. That's a lot of trades. It's the most agreed upon price of the last month. Market doesn't usually just rip up and just take it out. It usually causes a slowdown. Okay? So I can see us playing around this today. You know? Unless, again, something happens where the government is officially back or something. Some sugar rush, right? That boosts markets, right? Because that, like I said, in the grand scheme, macro scheme, I keep saying this, it doesn't matter. But you can get sugar highs from that to push markets, right? It's a positive thing, the government reopening, but it doesn't really matter. Okay? Now, so every time we got a gap, right, we have a gap fill. A gap fill would be 68.79 and a half. Happens to be your close. We closed at the highs yesterday. What does that line up with? Well, there's a 24-hour most traded price, and that's your 68.73. So we're pretty much an ultimate balance here. Okay. To me, the market would seem it's going to take a little bit of a break here, but who knows? Who knows? So that's important area. Now, also the most traded price, the 6885s, right here. Okay. We have this right here. Now, 50% retracement of yesterday lines up with the RTH most traded price. and then we have yesterday's lows, which actually are a poor low. So that if we do come back there, I feel we do break this, and I don't know how far we go, but and it unbelievable right here. Yesterday, my pre-market plan was watch this go down to the midpoint of the previous day. Look what it did. That was the low, and we didn't give you up. Great, great. But getting a little frustrating calling the markets. Documents probably not watching this live, but pretty much frustrating when I can say this is what we're probably going to do, and it happens, and then like my little futures trade gets stopped out by a tick or something like that, and then the market just does what I said it was going to do. A typical. That's what's so hard about trading. I'm usually right pretty much a lot with what I think the market's going to do, but sometimes it doesn't set up, or it sets up and I get stopped only for the markets to do what I thought, right? So, I was in a room, I was in my Discord yesterday telling my good friend, I was like, we're not going to go much lower here. It just does, it's not in the internals. I'm like, however, I think we push a little lower because of the way the structure is, but we just didn't. Okay, we just didn't. So now there's a lot of overhead supply in here, and I'm just going to put this here. That's last week's highs. That's your 6909s. We have a bullish imbalance too in this profile in the overnight. Okay, let's open this session up. It's not the best. I mean, for me right now, we're pretty much around ultimate balance, right? The most traded price of the month and the week are pretty much the same now. This would lean towards maybe a little correction and a little play around this level. Now, again, if we get a sugar rush from Trump or something that we could break some of the supply, but there's a lot of overhead supply here. And I don't long in supply, so I need a pullback. Okay, so let's just get right into scenarios. Okay, let's just get right into it. Now, bull side. Okay. All right, for me. Okay. I don't just chase. So it seems like we're probably going to break these highs. Okay. You have VPOC up in the session. It's a bullish balance profile. We're probably going to put a tail in. I don't know if it happens now before the market opens, but what I would plan on is this. Maybe hit last week's highs. Now you get the pullback, right? And either you just pull back to the most traded price of the month, right? That would be great. But even if we dip down and we fill the gap and we retake, that is your chance. It's for us to get maybe a rally up into 69.20s. Okay. That's viable. I want some of this supply taken out from then pulling back to reload. If this market just starts to rip, I don't really see that happening, but anything can happen, of course. Now, second, let's say we gap fill and we come back a little farther, maybe to yesterday's most traded price. Okay. Maybe we test this little support around 68, 67s. That can also push up and move up. Okay. Now this all depends too. The internals tell me. Now if we start and push down here, open up and start racing towards this most traded price of the week, the 50% retracement of yesterday, and we're like, and the market's like semi-weak, and let's say we break right here, this poor low from yesterday. and we do this, whoop, and we recover and make a lower high. To me, right here, this is what I just talked about. I'm either going to put a swing trade on in futures or some type of options play to get the move, the real move. Maybe I'll start with a day trade as well. This will really be what I want. Okay? This would really make me be very bullish here. Okay? That's your longs. Let's go to shorts. Okay? In a lot of supply here. So this is not going to be easy. We're gapping up, so we can go like this, push right up to that last week's high. I think people will take profits here. Then you make a lower high. Now you got the most traded price overnight around 68.98. If you pass that, I feel you will hit the most traded price of the month, 68.85. That could be it. Now, this is a short scenario, so if you go deeper, right? Now you filled the gap. You're at the most traded price of yesterday. And let's just say you push through it, retest it, and now you can work yourself into the midpoint of yesterday, the most traded price, right? And if the market's finally like, okay, market needs a breather, and you push through that, I think that's where you break yesterday's lows. Now, if you can't find acceptance here, the market is going to bounce as an opportunity to buy it. If it does not, and we start to find acceptance down here, yeah, this could go right back here to this high volume node around 66, 67.75s. Okay. I don't know what happens. Just giving you scenarios. Okay. I don't even know if I'm very much interested in this. But this is very likely correction right here at least. Do I trade that? I don't know. Okay. Depends on what's going on under the hood. All right. That's your ES. Let's talk about the NASDAQ. Okay. NASDAQ, remember, like I said, the structure's a little different. Okay, structure's different. And the NASDAQ still, I forgot to mention it again, you're surrounded by gap to the upside and gap to the downside. Here's your gap above us. Here's the gap below us. This is the price action we've been having. Are we going to fill this gap or fill this gap? I don't know. But that's just how the NASDAQ is looking. Okay? Now, you have a nice level here. Right here. Okay? We're in supply right now. We are gapping up. This is a perfect level here, the 25695s at your gap fill. And this encompasses the close, the overnight lows, the most traded price of the week. Most traded price of the week is 25650s. That is a nice place for a pullback. Okay, you have demand here as well. Most traded price of the overnight, 25786s. That is also a level to watch. Okay, so we do have this gap above us. It's a void. We do have the gap below us. Okay, I'll just signify the gap like this. Okay, now we have a bullish imbalance to this profile in the overnight. We do. Most traded price right here. I do believe we're going to rip up. Now, and I don't know how far. You can see to the left all the way right. Oh, you don't see it. There's a level here right at the gap is a key level. 25893 is about. Okay, right here. Let's just call it 259s. That level is a breakout level in right for the gap. Even though there's supply here, there's a gap there. There's a void. You can see a little bit in the volume here. Okay, that's a very important level. All right, right here. So pretty easy. Now let's go to the lows here. It's actually your most traded price was down here yesterday, if I'm not correct. Remember, volume and time don't have to match. Market profiles time, right? So it looks like time was spent up here, but the volume was spent down here. Interesting. Okay. So let's get into it, and I'll get you guys out of here. There's our price action. There's our price action. Okay. And let's get into scenarios. And we're going to start with the bull side. Okay. I feel we break these overnight highs. All right. I feel we break them. But how we do it, I don't know. Right. So pulling back a little bit here. Most traded price the overnight is 25786. This level right here. Okay. If we do go like this, I feel we're definitely going to pull back. We could definitely pull right back into the gap fill, touch that most traded price, make a higher low, and then that's how we break out. And then that 259 level, I don't know if we just rip up. We might go like this, pull back, and rip and fill that gap. Okay? And again, how internals look, I have no clue until the market opens. No clue. All right? Now, if we could just go like this, gap and go, boom. But I feel like we gap and go. We might tap that gap, pull back to the most traded price over, and then start to wiggle up to fill that gap. This is all I'm really interested in the NASDAQ. I really like this setup. I prefer a pullback to here first. All right. Now, shorts. Shorts. Okay. Remember, I said this is a key level. Now, what could happen here? Okay. We could push up, maybe even tap that gap. Then you get a lower high. Now, you might want to short. If you go through the 25786s, you're most likely gonna gap fill right here. That could be it for the Nasdaq. Remember, my long scenario is just this, but then it goes up. Now, if you get further selling, you're gonna stop here, the most share price of the week, 25650. That has to hold. If it does not, and you do one of these, and you start to spend time down here, retest, guess what we're going? We're going back to yesterday's lows. And now you have to deal with the other gap down below. If the market continually gets more weak, we could fill this gap. Now, the most traded price of the month is around this area. It's right here. Okay. 24 hours here. The real time's here. So let's just say it's around 25268. Right? And it might have to fill that gap, and then we figure out what's going to happen. Do I think that happens? Probably not. I think the better move is along today. Right? Now we have banks back. So who knows what's going to happen? I don't know. Okay? That's it for today, folks. I know I started a little later. So please smash the like button if you enjoyed my analysis. That would help out a lot. And of course, hopefully you join me every morning where I give you the market story, the latest news, why the market's doing what it's doing. Okay, and I just gave you the long and short trade scenarios in the NASDAQ and the ES futures. All right. If you want more in-depth coverage, you're going to go and join my Discord. That's Confluence Trading. Go to the YouTube homepage, click on the link and sign up. What are you waiting for? Let me be your indicator. And I have to give myself that advice. Okay? Because, a little sidebar here, what's getting very frustrating for myself is typical day trading, right? I have a tight stop and then I'm looking for a move and my analysis is always pretty much right, but then I can get stopped out. And then if you get stopped out again, you don't want to like put, It's hard to keep losing, and then all of a sudden you're right, right? And yesterday, like I said, I was on with my friend Documents, who's in here. I don't know if he's watching yet or he's watching the playback, but I was like, we're not going much lower here. It just doesn't make sense. And then we don't, right? And then, my analysis is always snapshots, 5, 10 minutes, right? Usually they hold, but then if the market keeps doing something, you have to change your snapshot, right? It always changes, right? So I'm thinking I have my SPX credit spreads that I could be putting on, but I have not been getting my trade setups. I just being blatantly honest. They are not, you're not getting pullbacks. When the market moves lately in the last 3 weeks, you're not really moving up, retesting an area, and then going. It just goes. It just goes. And I'm a pullback trader. It's literally not doing what I want to see in Bookmap. I still have my analysis. That's always spot on. However, I'm not sitting here with banks of money going, yeah. Even though I called every day this week accurately, right? I'm not sitting here with tons of cash. And I'm trying to think to myself, what do I do? Like, how can I constantly be right? And the only thing I'm thinking of doing is to make it easier on myself is to, when I'm not getting my setups, to switch to a higher time frame. Maybe trigger in on a 15-minute and look at the half hour to hour. And I think I'm going to start doing that. Because now there's less noise, right? If I put my stop at the bottom of an hourly candle or something like that, and my stop loss will be wider, right? The difference is, though, is you could really catch bigger moves this way, right? So that's something I'm going to start experimenting with, where if I'm not getting my setups, and I'll be honest with you, I'm not comfortable trading like how I did this week. I'm not comfortable when I'm not getting what I like, when I'm not getting what I like to see. It doesn't make me feel comfortable. So if I switch to a higher time frame, and I was looking at it this morning going, okay, let's say if I just entered here on a break of a 1 hour candle, when I feel my analysis we should move higher today, I'd be doing great based on my analysis, because now my stop isn't like a couple of points away. I'm taking advantage of my analysis. So I don't know. You always got to change and adapt in these markets. All right. I'll leave you with that. Everybody, have a great day. Remember, no trade's a trade. If I see you in my Discord, I see you. If I don't, I'll see you.